Welcome to the Deep Dive, where we navigate the vast ocean of financial data and market chatter to bring you the most critical insights. In our hyper-connected world, where cyber threats are not just constant but evolving with AI-driven sophistication, cybersecurity isn't merely important. It's, well, foundational. And sitting firmly at the heart of this essential industry is Fortinet, ticker symbol FTNT, a true market leader. But here's this central question we're diving into today. Does Fortinet's integrated security platform truly build an impenetrable digital moat for its customers, and, by extension, for you, the investor? Or has its sheer scale and some recent market reactions revealed a surprising vulnerability? We're going to unpack a stack of detailed reports and research, cutting through the noise to understand if Fortinet's recent stock price movement is a warning sign, or perhaps a surprising opportunity to dive into a high-quality business at a fairer price. Our deep dive today is based on data as of August 15, 2025, with a reference stock price of $78.47 from August 12, 2025.
Yeah, and what's truly compelling here, I think, is how a company with such a robust foundation, a dominant market position, can still experience significant market volatility. This deep dive should really help you peel back those layers, move beyond just the headlines to understand the core drivers behind Fortinet's story. It's crucial to understand these nuances, especially in today's dynamic tech markets.
Absolutely. To truly understand this, we need to begin with Chapter 1, the business of digital fortification. So Fortinet operates on a rather sophisticated hybrid business model. They generate revenue from two primary streams: product revenue and service revenue. Product revenue, essentially the upfront sale of their hardware and software, like their flagship FortiGate security appliances, contributed about $1.91 billion in fiscal year 2024. Interestingly, that segment saw a slight decrease, of about 1%. But then you look at service revenue. This is the recurring subscription stream from offerings like FortiGuard security services and FortiCare technical support. This is where the growth story really is right now. In FY 2024, service revenue soared to $4.05 billion, marking an impressive 19.8% increase. It now makes up about 68% of their total revenue.
Right.
This isn't just a number. It's a huge strategic shift toward a more stable, predictable, and sticky SaaS-like model, which, investors tend to value very highly.
And placing this in a broader context, Fortinet's sheer scale is just dominant. They're not just a player. They are the #1 in security appliances shipped worldwide. We're talking over 14.7 million units deployed. They serve over 890,000 customers globally, including an impressive, 70% of the Fortune 100 companies? It really is. And their core value proposition is, honestly, quite brilliant. They simplify the overwhelming complexity of cybersecurity. They do this by converging networking and security into one high-performance integrated platform. Think about it. This directly addresses what many IT departments call vendor sprawl, the nightmare of managing dozens of different security products from various vendors. Fortinet cuts through that, reducing the total cost of ownership for customers while significantly enhancing their security posture.
And it all funnels through their unified operating system, FortiOS, which powers, over 50 enterprise-grade products. Their key strategic offering is the Fortinet Security Fabric. It's basically an integrated and automated cybersecurity mesh platform. What exactly does that mean for customers? It's essentially like a comprehensive digital immune system built on 3 pillars. First, secure networking with products like FortiSwitch and FortiAP providing the foundational network defenses. Second, unified SACR, that's secure SD-WAN for intelligently routing network traffic. Zero trust network access, meaning you verify everyone and everything before granting access. And cloud access security broker to secure cloud apps.
Critical growth area, that's S part.
Absolutely. Together, they create a comprehensive cloud security solution. And finally, there's security operations with tools like Fortisium, which collects and analyzes security logs, and FortiNR for advanced endpoint protection. What's truly powerful is how all this is powered by their FortiGuard AI-powered security services. Get this, processing over 100 billion security events daily.
100 billion daily. That provides real-time threat intelligence. It's a staggering amount of data feeding their AI.
Really is.
And the underlying demand for these solutions is immense and, importantly, growing. Global security spending is projected to hit $213 billion in 2025, up 15.1%. Why? Well, because cybercrime has industrialized. It's now leveraging AI for sophisticated attacks like fraud GPT.
Scary stuff.
It is. And cloud security is also a massive driver. 85% of organizations plan to be cloud first by 2025, pushing cloud security into a 25.9% compound annual growth rate. We also see IT/OT convergence, where operational tech like industrial controls are now networked, opening new attack surfaces.
Sure.
And don't forget the heightened regulatory scrutiny from bodies like the SEC, CISA, NIST. That's compelling companies to invest more. Fortinet sets itself apart from competitors like Palo Alto Networks, Cisco, Checkpoint, primarily through its highly integrated platform and, crucially, superior price performance. That comes directly from their custom hardware.
Right. And here's where it gets really interesting. Fortinet's competitive advantages. We're talking about incredibly strong brand recognition earned over 2 decades, making
Yeah.
them a trusted name. But their true secret sauce, you could say, is their unique custom-built security processing units, or ASICs.
The ASICs.
Exactly. Think of them like specialized turbochargers just for security tasks, designed to process stuff at lightning speed. Unlike competitors who often rely on general-purpose CPUs, Fortinet's ASICs give them a powerful cost and performance advantage. It lets them deliver higher throughput at lower prices.
That price performance point is key.
Definitely. And then there are the powerful network effects of their security fabric. The more products a customer uses, the more integrated, valuable, and sticky the whole ecosystem becomes. A threat detected on one device can automatically trigger a response or a policy update on another. This creates incredibly high switching costs for customers.
Right.
It locks them into the Fortinet ecosystem. Plus, their extensive intellectual property portfolio is a huge asset. 1,401 global patents, over 500 just in AI alone. That's nearly 3 times larger than competitors.
Wow, 3 times. That's a significant barrier to entry for rivals.
No kidding. So with such a robust business and impressive market position, who are the leaders steering this digital ship? Let's turn our attention now to Chapter 2. Evaluating the architects of the fortress.
Right, and this brings up a crucial insight. Fortinet is notably founder-led. It's the brothers, Ken Xie, the CEO, and Michael Xie, the CTO. Ken Xie, in particular, has a really impressive track record. He founded 2 other successful security companies, including NetScreen Technologies, which got acquired for $4 billion.
Okay, so proven experience there.
Exactly. This kind of deep, experienced leadership, directly involved day-to-day, is pretty rare and often a strong positive for a company's long-term vision. Another interesting point to note is their transparent approach to product vulnerabilities. They have a dedicated Product Security Incident Response Team, or PSIRT, and a formal process for handling critical issues like that CVE 2024-262, which was a significant SSL VPN vulnerability. They promptly issue advisories, provide clear mitigation guidance that builds crucial trust with their massive customer base, especially in a world where security breaches are, well, constant.
That makes sense. Okay, let's unpack their capital allocation strategy. How are they using their money? Fortinet primarily invests in organic R&D. They've poured, get this, $2.9 billion into innovation just since 2020, and a staggering 84% of that was dedicated to internal development. They build it themselves.
Mostly in-house, yeah.
They seem to prefer smaller, strategic tuck-in acquisitions like Lacework and NextDLP recently. These help them fill specific technology gaps without the major integration headaches you often see with large-scale mergers.
Smart approach.
Historically, they've been quite aggressive with share buybacks. They returned $6.8 billion to shareholders that way, increasing earnings per share by 35% over time. However, here's a key point for you, the investor, to really chew on. They've had a notable pause in buybacks in the last 12 months, ending 2025.
Yeah, that's significant.
It isn't just a minor blip. It could signal a strategic reevaluation of capital allocation, maybe pointing towards a ramp-up in M&A, or even a subtle acknowledgement that maybe leadership sees its stock as less undervalued than before. It raises critical questions about future shareholder returns and management's confidence. We'll circle back to that. As for dividends, they don't pay any cash dividends. They prefer to reinvest all capital back into this high-growth business, which is pretty common for growing tech companies.
Right, standard playbook there. But a crucial observation here, something that really stands out, is their return on invested capital, or ROIC. It's truly exceptional, standing at 53.9% for the last 12 months. Now, to put that in perspective, the software infrastructure industry median is a mere 1.6%.
Wow, 1.6% versus almost 54%.
Exactly. This isn't just a good number. It means for every dollar Fortinet invests, they're generating significantly more profit than almost anyone else in their sector. It's a clear sign of incredibly efficient capital deployment and, frankly, a high-quality business model.
Okay, elite-level efficiency. Now that we've looked at the business itself and the people leading it, let's do a deep dive into the numbers that really drive investor decisions. Up next is Chapter 3, a financial deep dive. As of August 15th, 2025, Fortinet's market cap sits at about $59.19 billion. Their trailing 12-month, or TTM, revenue is $6.14 billion. Crucially, though, the TTM revenue growth is 13.83%, which is notably lower than their 5-year average of 22.6%. This deceleration has been a key concern for the market, no doubt about it.
That's the friction point.
Exactly. However, look at their profit margins. They're exceptionally strong. TTM gross margin is 81.29%. TTM GAAP operating margin is 30.72%. And TTM net profit margin is an outstanding 30.60%. These are truly top-tier metrics within the industry, reflect significant pricing power and efficiency.
Definitely. And stepping back to see the wider financial landscape, their earnings consistency is exemplary. Diluted EPS has grown steadily from just $0.03 in 2014 to $2.26 in 2024. That's solid growth. And their balance sheet is what we'd call fortress-like, incredibly strong and resilient. They have a very low debt-to-equity ratio of 0.48. Plus, they have significantly more cash, $4.6 billion, than debt, which is only around $995 million. Their current ratio of 1.36 also shows robust liquidity. They have ample assets to cover short-term liabilities. This financial strength is a major competitive advantage.
And when it comes to cash flow?
Yes, cash flow. They are a prolific free cash flow generator, $1.88 billion in FY 2024. That represents an impressive free cash flow margin of 32.07%.
Still very strong, even if the growth slowed a bit.
Right. That growth has slowed to 8.5% in 2024, mirroring the revenue deceleration we talked about, but it's still generating a significant amount of cash that they can reinvest or potentially return to shareholders down the line.
Okay, so strong financials, but slowing growth. That brings us to valuation.
Exactly. This raises an important question regarding valuation, especially given that recent market reaction. At that closing price of $78.47, Fortinet's price-to-earnings, or PE ratio, is about 31.1x. What's fascinating here is how much this is compressed compared to its history. Its 5-year average PE was 54.7x. Its 10-year average was way up at 137.6x.
Big difference.
Huge difference. It also appears attractive relative to peers whose average PE is around 65.1x and the broader software industry average of about 121x. This strongly suggests the market's expectations for Fortinet has significantly reset to a more conservative level. Our educational discounted cash flow, or DCF model, which forecasts free cash flow into the future and discounts it back to today, estimates an intrinsic value range of $78.89 to $84.64 per share. Now, that's based on assumptions like 13-14% initial revenue growth, slowing to a 2.1% long-term terminal growth rate, and using an 8.1% discount rate, which reflects their cost of equity.
Okay, so the current price is right at the bottom, maybe even slightly below that estimated range. Now, let's explore how the broader market is feeling about Fortinet and what that might mean for you. We're now in Chapter 4, Market Sentiment. Analyst sentiment seems pretty mixed, actually. There's a consensus hold rating from 33 analysts. Price targets vary widely, from $75 all the way up to $125, with an average somewhere around $92 to $96. But many of those targets were revised downwards after their Q2 2025 earnings report.
Right, and that Q2 2025 earnings report, released back on August 6, 2025, it sparked a truly significant market reaction. Despite Fortinet actually beating EPS estimates and even raising billings guidance, the stock plummeted nearly 19% pre-market.
Ouch, even with a beat.
Yeah. The narrative quickly focused on that growth deceleration, particularly in product sales. It led to what investors often call a show-me stance. Basically, the market wants to see tangible proof of consistent growth reacceleration before it fully buys back in. What's also compelling here is looking at the technical market indicators. Short interest is moderate, around 2.86% of the float. So some bearish bets, but not an extreme level of skepticism. However, technically, the stock is decidedly bearish right now. Its current price of $78.47 is significantly below both its 50-day simple moving average, which is around 9,901 ones, and its 200-day SMA, also in that 9,801 range. This indicates negative short-term and long-term momentum. The stock has clearly broken its long-term uptrend and is currently facing strong selling pressure.
Got it. Technical picture looks weak. So with all that in mind, who actually owns Fortinet? And what do those ownership patterns tell us? Let's unpack the details in Chapter 5. Ownership structure. About 71% of shares are held by large institutions. Think Vanguard, BlackRock. This typically provides a stable investor base, but it's also highly concentrated. The top 18 shareholders control over 50% of the company. That means significant moves by just a few large funds can have a substantial impact on the stock price, up or down.
It does add volatility potential, and this raises an important question about insider holdings. Insiders own a substantial 15% of the company. That's valued at nearly $12 billion. Founders Ken and Michael Xi hold over 7% each. Now, this level of insider ownership is usually seen as a strong positive, right? It closely aligns management's interests with shareholders.
Usually, yes. Skin in the game.
Exactly. However, what creates critical tension here, and something you really need to consider, is the pattern of recent insider transactions. We're seeing 33 sales versus only 2 purchases in the last 6 months. Key executives, including the Xi brothers themselves, have sold shares worth tens of millions. And notably, there have been no open market purchases during the stock's recent weakness when the price dropped.
No buying on the dip from insiders.
None reported on the open market. Now look, insiders use sell for various personal financial planning reasons, diversification, taxes, you name it. But the sheer imbalance between sales and purchases, especially when the stock is under pressure, forces us to ask, do the company's own leaders see a less compelling short-term opportunity than maybe some external investors might? It's a data point that definitely warrants careful consideration. It's a potential red flag.
That's a fascinating point about insider sentiment. Definitely something to watch. Moving on, let's consider the full spectrum of potential challenges and opportunities for Fortinet. We're now in Chapter 6, Risk Assessment. We've compiled a comprehensive SWOT analysis, strengths, weaknesses, opportunities, and threats to help you see Fortinet's position clearly. On the strength side, we've covered a lot of this. Dominant market leadership, elite profitability, that wide economic moat from their security fabric and ASICs, and that incredibly strong balance sheet. As for opportunities, they operate in large and rapidly growing markets. Secure networking, unified SaaS, security operations, all expected to reach tens of billions by 2027. Huge potential there. There's also an upcoming product refresh cycle expected late 2025 and into 2026, which could reignite growth. Plus, the ever-increasing cyber threats creating demand and strong regulatory tailwinds pushing companies to invest more.
Plenty of tailwinds. But placing this in broader context, the market's primary concern and a key weakness is indeed that decelerating billings and revenue growth we keep mentioning. They also face some supply chain concentration risks, and while they're expanding, they do face challenges in the rapidly evolving cloud-native SaaS market where more agile competitors are emerging. The threats are also significant. Intense competition is just ever present from both established players and new innovators. Macroeconomic headwinds are causing tighter cybersecurity budgets globally. Average growth is slowing to just 4% in 2025. That's the lowest in 5 years. And cybersecurity's share of IT budgets is actually shrinking slightly.
So the budgets are getting squeezed.
They are. And what's particularly insightful here is a specific geopolitical threat: the U.S. imposed tariffs of 2025. Fortinet's stock dropped 7.72% on the day that was announced. That reflects real concerns that these tariffs will increase their hardware costs. That could potentially pressure their strong margins or erode their critical price-to-performance advantage, which, as we said, is a key differentiator for them.
Okay, tariffs are a specific headwind to track. Now let's bring it all together and draw some conclusions from this deep dive. Our final segment is Chapter 7, Conclusion. So the bull case for Fortinet remains compelling, right? It's a best-in-class business with a wide economic moat, market leadership in a growing industry, elite profitability, strong free cash flow generation, and that incredibly resilient balance sheet. Its integrated security fabric, powered by FortiOS and custom ASICs, creates powerful network effects and high switching costs for customers. From this perspective, the recent stock decline, particularly considering the valuation compression we discussed, presents an opportunity. A chance to acquire a high-quality enterprise at a more reasonable price.
True, that's the bull argument. But this raises an important counterpoint, the bear case. The bear case centers on that clear deceleration of growth. Some fear it isn't just a temporary dip due to macro factors, but perhaps a new, slower growth phase for the company as the market matures or maybe shifts towards different solutions. Intense competition, particularly from those agile, cloud-native SaaS vendors, is a real challenge that could impact future market share. And, we have to mention it again, that consistent, significant insider selling without corresponding open market purchases is a notable red flag that you just can't ignore.
It clouds the picture.
It does. Furthermore, macroeconomic budget tightening and those specific geopolitical tariffs pose ongoing external risks to their financial performance and could continue to create headwinds for a while.
Okay, so weighing the bull and bear cases. Where does valuation sit now? Based on the educational DCF models we looked at, Fortinet's estimated intrinsic value is in the range of, let's say, $78.89 to $84.64 per share. With the stock closing at $78.47 on August 12, 2025, it sits right at the very bottom, or maybe even slightly below this estimated range. So the market seems to have largely priced in the concerns we've discussed: the growth deceleration, the competitive landscape, perhaps even factoring in some of that insider selling impact. It's no longer looking overvalued based on these models, but it doesn't offer a significant margin of safety right now either.
Fair assessment.
So, the bottom line, Fortinet is undoubtedly a high-quality, wide-moat business. It seems to be facing what appear to be temporary external challenges. It's definitely a company to watch closely. A deeper investment opportunity for you might emerge if the price drops further, offering more margin of safety, or perhaps more importantly, if future results clearly show a sustained reacceleration of growth. That would be a key catalyst.
Yeah, proof points are needed.
We hope this deep dive into Fortinet has given you a clearer, more nuanced picture of this cybersecurity giant. If you found this valuable, we encourage you to like and subscribe to Stock Analytics AI on YouTube. Members at just $4.99 on a month get priority deep dives on specific tickers you want us to cover. Over the next few months, we're covering all of the S&P 500 stocks, and members get exclusive priority access to these in-depth analyses. And hey, if you just want a one-off deep dive on a ticker you really care about, just drop us a super thanks. We appreciate the support.
As we wrap up our deep dive into Fortinet, we've seen how a company can possess cutting-edge technology and, really robust financials, yet still face investor skepticism. Skepticism driven by short-term market reactions and these nuanced data points like insider selling, it raises a fascinating question for you, the learner. In an age where AI-driven threats demand constant innovation and adaptiveness, how do you personally weigh a company's undisputed technological leadership against fluctuating market sentiment and the complex signals from insider transactions? What truly signals a buy opportunity for you? Something to think about.
Definitely food for thought. And just a reminder, this analysis was generated by an AI system for educational purposes only. It should absolutely not be considered financial advice. Please conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.